This is the Fleet Europe podcast, hosted by Roberto van Buiten and Steven Schoefs. Today's topic, global fleet success amid political and economic turmoil. Introducing today's guests, Geoff Lurz, Vice President of Commercial Leasing at Element Fleet Management, and automotive industry expert Uwe Hochgeschurtz. Enjoy the episode.
Hello and welcome to this global edition of the Fleet Europe podcast. And today we will discuss the changing role of the global fleet manager due to geopolitical and economic turmoil, enhanced technology and environmental challenges. And I will be hosting this podcast as always with Steven Schoefs, our head of strategic relations at Fleet Europe and globalfleet.com. Steven?
Pleasure being here.
Yes,
Luberto. Thank you.
Likewise. So we're going to discuss the current economic situation. What do you think?
Well, probably if I say something now, then in 10 to 15 seconds, probably it's not valid anymore. So, no, I think it's an interesting period for businesses, but it's not the most easy one. Because if there's one thing that businesses don't like, that CEOs don't like, it's uncertainty, and the least you can say at the moment is that there is a lot of certainty about what the future holds.
Exactly. So let's see if we can bring some certainty in an uncertain world. Today we have two guests to discuss the topic of global fleet management in a time of political and economic turmoil. And that's Uwe Hochgeschurtz, automotive industry captain and former CEO of Opel and COO Europe at Stellantis. Uwe, welcome.
Pleasure to be here. Thank you.
Very good that you're here. And Geoff Lurz, Vice President Commercial Leasing at Element Fleet Management.
Great to be here. Thank you.
Yeah, you're welcome as well. And you lived in the US for a long time. You are from the US, but now living in Europe as well, right?
I am, yes. Yeah. Last year I moved to Ireland to open an office in Dublin for Element. So it's been a great adventure over the last 10 months and looking forward to seeing where it goes.
Yeah, I can imagine. A great city, great country. Uwe, you have an immense track record when it comes to working on management positions at big OEMs. What's your current position and work? What do you do nowadays?
No, I'm still working the automotive business. I created my own company, and I share all my knowledge, all my opinions about the automotive industry. I still think it's probably the most exciting industry we have. It's about mobility, it's about products, it's about driving. So there are plenty of things you can communicate, you can consult on, so I'm still on it.
Yeah, exciting times, I think, these times. Geoff, you as a leader at the Global Fleet Solution Company in Canada, what do you think of the impact of the current US administration that they are having in the world at this moment? Because Trump is saying one thing and everyone is reacting.
Indeed. I think Steven said it perfectly. We are living in an unprecedented time of uncertainty. And I say unprecedented sort of tongue-in-cheek a little bit because I think for the last 5 to 7 years or so, the fleet industry and fleet managers in particular have been dealing with a ton of uncertainty, whether it be supply chain issues with the microchip shortage or COVID issues. And then we had auto worker strikes, specifically in North America, that were impacting supply chain and things. And so I feel for fleet managers. Truly, the uncertain times, to Steven's point, are not what people want, of course. They want certainty. They want predictability. And to your point, so how do we help people navigate through that uncertainty? It's really about planning, right? You have to have the right plan in place, and you have to have consistency and be able to execute on that. But yeah, I think that the times are as unprecedented as they've been, and we'll see where they go in the next 30 minutes or so.
Exactly. Let's see what has happened when this podcast is recorded. But I think for the both of you, it is like in these times that your consultancy and your advice is very much needed at this moment for fleet managers to make the right decisions, or maybe even not make a decision at all at this moment, right?
Yeah,
so
absolutely.
Let's go now first to our opening statements. So I have a statement for the both of you, and you can answer with yes or no. Uwe, I start with you. Traditional European OEMs will lose grip on leasing and fleet management business in favor of the Chinese brands. Yes or no?
Very clear yes, huh? But it is not too late. I hope we can say more than one word.
Of course.
Yes, but it is not too late. We have to move the right things. We have to accept in Europe that BEVs is the future. We have to accept that the autonomous driving is the future. We have to accept that artificial intelligence will play a major role. We will have plenty of opportunities with telematics, with additional services, plenty of opportunities, potential. So if we move our opinion a little bit to modernity, we will not lose the battle. But if we let the others go, if we let the Chinese take all these areas, then we are in a very, very bad position. That is clear.
Yeah, so we started late, but not too late in Europe.
It's difficult to say. I would say to be very specified, in the battery sector, I think it's very late. There is no OEM today who has a leading role in battery manufacturing, in battery research, in battery technologies. So I would say it's very late. It's never too late. I mean, no. I have seen 35 years automotive industry, so I would never say it's too late. But we are lagging behind by far on the battery. But all the other issues I said, artificial intelligence, autonomous driving, we have some European OEMs which are number one on autonomous driving. So let's push this. Let's not give up. Never give up. On the battery side, we have to do something because battery today is 30 to 40% of the value chain. Yeah. So if you think, and I say, and I mean, and I know that BEV is the future, if you think that without 30 or 40% of the value chain, you can survive, I will tell you, no, you cannot. You must be part of the game.
Yeah, so it's very important to invest in that. I think we can talk a little bit more about that later, but first I go to your statement, Geoff, and that is leasing companies should stimulate the economic environment they work in by ordering brands from their specific region or country. So if you're a European-based leasing company, you should buy European brands. In the US, you should buy US brands.
Yeah, I think similarly, the short answer is yes, but there's always nuance wrapped inside. And if you allow me, I think, look, you can always stimulate your regional economy by sticking to local brands, right? It's better for the supply chain in a lot of ways. It's better for sustainability in a lot of ways. But specifically in North America, our clients manage vehicles that are what we call colloquially mission critical assets. These are vehicles you would refer to them as light commercial vehicles here in Europe. They're vehicles to do a job, to deliver a service, and they're critical to companies' businesses. And so they don't have quite the luxury of saying, well, I'll just switch to something different if the brand that I'm used to does something, adds a extra cost or the costs go up. So there's a little bit of nuance there, and that's where we have to help clients navigate through that. And one of the ways too is, look, you can still purchase OEM brands from not inside the US or not inside North America if the vehicle is manufactured in the US, or there's some nuances there that we can help clients navigate. But it requires a lot of information, a lot of data, a lot of connectivity with the supply chain. And so, again, I think, yes, you can stimulate your local economy doing that, but there are lots of different ways to operate in this sort of time, and doesn't always mean only looking local.
What do you think, Stephen, about this?
I would say that I'm working now more than 20 years, I think, in the international business. So I would not say that I'm in favor of going local, but in certain circumstances, it can sometimes be preferable. But I am always open to a little bit more selection possibilities. And I think that it's also typical for the economy. If you are doing business with a partner outside of your hometown, then there is also an opportunity that person becomes interested in your hometown, which could create a better dynamic even and growth in the future. So I'm not the one who is going to defend protectionism.
All right, Stephen, thank you for that. Let's go to our next chapter of the podcast, and that's in the news. And this is actually quite easy, I hope at least. And we want to hear from you what you read in the news lately or heard in the news lately that you think is interesting for our listeners or viewers. Uwe, to start with you.
This is quite easy because when I landed, I put on my phone, I saw that there is apparently an agreement between the US and China. I don't know how long it will take and how much will be changed and modified. I don't know, but you can see immediately on the stock market, immediate reaction in Europe was very, very positive. So what does it mean? It means when you come up with more free trade, you create growth, value, and wealthiness. This is all the things you do, and that's what we have done in the last 40 years. In the last 40 years in the US, in Europe, together, we had each single year in average around 2.5% to 3% economic growth. Every single year for 40 years. These were my best 40 years. And now we see in the first quarter of 2025 that the US are negative. I think these are just first numbers, but this will be confirmed. So this was a very good news this morning, and the markets go up, and I will see, and we will all see, that the investors will put more money on the table to invest. Because if you invest only in one region, only in one out of those 3 or 4 big regions, your investment is more likely not to be very efficient. But if you have the full world, then you can produce, you can develop, you can invest all the things you want. It's a difference if you consider 250 million consumers or if you consider 8 billion consumers. So I think this was good news. Hopefully it will not tonight be modified into, we didn't say that. Huh?
Yeah.
So, but I would say it's good news, and I think we're on the right track. And I'm very positive we will get back on track because everybody is looking for wealth, for growth, for investment, for safety. That's very important.
Yeah. All right. Thank you, Geoff.
Yeah, I was thinking the same thing. Of course, that's the obvious one. I will, if you allow me, I'll tell a quick anecdote. I was in Canada 2 weeks ago, and this was my first time back in North America. As I said, I'm living in Ireland, so my first time back in North America since this whole tariff war, whatever you want to call it, has been happening. And I sat down at the hotel bar to order a glass of wine, and they had California Cab on the menu, and I asked for that, and they said, "We don't carry that anymore. It's replaced with a Canadian wine." And so, like, you can see these things are right there, front and center. They're palpable. They're touching everyone. It's not just certain industries. It's touching everyone down to local businesses and things. And so, to your point, like, people want to get back to a place of open, free trade. It creates growth. There's no denying that. And to Stephen's point, it opens up culturally borders and things like that. So, yeah, I found it very interesting. Even the commercials on TV and on the radio were all about, come to my business. It's Canadian-born business. We're making our goods here. So it's this idea of protectionism and things is starting to fester a little bit, and I think definitely something to watch out for.
Yeah, yeah. I didn't know there was something as Canadian wine. That's I think my perception is that all good wines come from or Europe or Argentina.
That's your perception. Indeed.
Exactly.
Yeah. No, I think that also, of course, I can't say another important event than the one that was just described. I was going to say, well, there is one thing of certainty, and that is that we have the new Pope, and it's a North American one.
Exactly. Yeah.
Exactly. Yes.
Yeah.
But indeed, yeah. So the news from today with the deal between the US and China, that's a very good but also important deal, I think.
Yeah, I think you're right. And today it's now May 12th, if I'm correct.
Yes.
Yeah.
Yes.
So when this one is aired, we don't know what is the situation at that time. But for the listeners at that moment, we were talking about the fact that the US and China agreed to slash the tariffs on each other's goods for 90 days in a major de-escalation of their trade war. This is, by the way, quite funny that both sides will cut tariffs by 115%. That is possible to cut tariffs with 150%. That I can say this is now so smoothly is, of course, because I'm reading it from a newspaper, because that was also my news of the day. Mm-hmm. But that will be no surprise to all of you. So then we go seamlessly and smoothly into the topic of the day. because that is, of course, global fleet management in a time of political and economic turmoil. Yeah, we were just discussing the war on tariffs, or what should a fleet manager do with that at this time? It's the world is changing so rapidly. What can you do?
Well, yeah, we can. Well, you made the point earlier, right? It's either about you can either guide your client or the company to make a decision, or maybe the decision is to not make any decision at all. And so it's very specific. We want to make sure that we're being very careful and personalized with our clients to make sure we understand what their business objectives are, what are they trying to accomplish, and then helping them craft a strategy that guides them towards the achievement of those objectives in this time. And that can look like many different things. A month or so ago, our relationships with the OEMs led us to understand that there was going to be some price protection in North America if orders were into the factory by a certain date. And so we're looking at clients that are eager to place orders, that have orders coming up for the spring cycle, and say, hey, this is the time to do that. And maybe there's even a need to accelerate orders into the system to take advantage of that price protection and make sure that you can get in before the continued uncertainty develops. And we saw that strategy play out. And so there's a number of different things we can do, but I think it all comes back to the evolution of sort of the fleet manager role and being more data-driven and more strategic and partnering with those in their supply chain that can help guide them through these times. And you do that through the understanding of the supply chain, through data, through analytics, and I think you've already been seeing the industry moving in that direction, and now it's even more prevalent to go there.
Yeah. Uwe, what do you think? What should
I would
do
say for the first time since some decades, the fleet managers have to think more local. It's a pity, but it's true, because you can protect yourself only by doing this. If there is any big region in the world, like the US, which is probably the biggest economic space, which is taking such decisions, you have to protect yourself. So you have to be able to think local. And I can tell you, the OEMs do the same. They will bring a lot of products to the US to make sure that their best insurance policy is to be local. And that is the same for the fleet manager, because it can be that you have a good supplier, which tomorrow is not there anymore because he has to pay 100 or whatever, 120% of tariffs. So that is my advice. I regret it a lot, but it's the case. And if you don't do that as a fleet manager, you don't protect yourself, you don't protect your suppliers, and you don't protect your customer. That is my takeaway from this.
Yeah. So, and what do you mean by acting local? That is what we earlier discussed.
For example, if you have a big group buying vehicles or mobility everywhere on all continents, try to localize business. Buy your US vehicles from US brands manufacturing in the US. This is just a photograph. Of course, I can change. If you are in Europe, buy it from European players, from European factories. Not because it's good, not because it creates wealth, but it is your insurance policy. If not, they will not be able to do it. One example, Chinese products are not relevant in the US. There is no big Chinese car manufacturer in the US. So be careful with this. Don't buy a Chinese car, because you never know if you get the parts, if you get the service, if you get the dealers. So focus on the local possibilities more than on the international ones. And again, it could be more expensive. But this is another obvious evidence that not having a free trade is more expensive than having a free trade. But you have to protect yourself.
And so what you are saying is that it's not just about buying local brands, it's buying local produced brands.
And I would even go farther. I would say consider the full value chain. Suppliers, production, headquarter in this area, leasing company, rental company, be careful, because this is something you can rely on. You know it will not change. The Americans cannot change the supply chain of Europe, and the European cannot change the supply chain of the Chinese. But if you don't make yourself in a, let's say, comfortable or safe situation, you will be surprised one day, because there is probably in your full supply chain one element which is not fitting. Then not in a good position. That's what I'm saying.
Yeah.
I would add too, just after the purchase, even in talking about the life cycle of the vehicle, we haven't even gotten here yet, but parts are becoming more expensive. So therefore maintenance is becoming more expensive. And so fleet managers are having to make that decision. Do I run vehicles longer? And then do I have increased risk of downtime? And so there's so many tack-on effects to that situation that need to be navigated. And again, this comes back to me to leveraging partners that understand the full value chain, understand where the parts are coming from, help you navigate to the right part suppliers or to the right maintenance networks that have supplies that are from the U.S. from the U.S. or whatever region that you're in, not being impacted by the.
Yeah, because that sometimes surprises me, that we were talking about, for example, the introduction of a lot of Chinese brands into the European market. And then it's always about their pricing. And maybe even about the RV, but never about the maintenance and the availability of spare parts. And we've seen that, of course, also when Tesla entered the European market and your car was damaged, they didn't have a after-sale strategy at all. So that is, of course, also a big risk.
It's a big problem for the fleet managers, not for the private customers. If you buy a Chinese car, it's less expensive, maybe 20%, so I buy it. But for a fleet, because a fleet manager here has to make sure that there is mobility in the company, nothing else, only mobile. And if there is any issue, service, repair, overnight you can repair it, no problem. I bring it in the evening, I pick it up in the morning. But you cannot say, oh, we have no parts. And that is the thing what I'm saying. Don't rely on this. And this is something the Chinese don't understand as of today in Europe. And probably they don't understand it for the US either. And that this is, if you do not provide this certainty of providing parts, financing services, telematics, all this stuff, they will not get into the fleet.
No. Do you think that now, because of all the turmoil worldwide, it's going to be harder for the Chinese brands to, let's say, conquer the European market with their cars? Or
I personally would say yes, but I know our Chinese friends, they learn very, very quickly.
Yeah.
They adapt very, very quickly. They know exactly what is the issue. The problem is you can make a good car and bring it to Europe, but to install a good network of after-sales with competent service providers, that is not so easy. That takes much more time. But they understand it, they know it, and they will change it, for sure.
Don't you think that they will come in a couple of years, not only with the product, but also with the services? For example, finance, insurance, etc., and that there is also an increased competition for other industry players, not only the OEMs, but also the service providers.
Stephen, you're absolutely right. There is a clear strategic plan. They first do the product. They do it better and cheaper. Then they go into the value chain, the supply and value chain. Then they look for the after sales. Once this is fixed, then they go into the insurance business, and then they go into the financing. And then they go into the investment bank business. You will see, they will do it. I was recently on a presentation to the insurer, the European insurer. I told them, you are looking at me, but one day I will be looking at you because you will be the next victim.
Yeah, so they start with the product and then they go further and further.
Which are physical, but then they learn very quickly. They understand there is much more to earn. And we all know, today some OEMs earn more money financing of a product, of a sale of a car, than with the product itself. And they know it. They will cover this for sure.
Yeah. Once they have gained some ground in Europe.
Exactly.
Geoff, what would your advice be to fleet managers
related to Chinese OEMs?
Yeah.
I mean, so look, in North America, if that's what I'm speaking to, like we're not seeing the Chinese brands making their way there, so we don't have to worry about it too much at this stage. But I don't disagree with anything that's been said. Like
but you're also present, for example, with Element. You're also present in Mexico, and in Mexico there are quite a lot of Chinese brands that are now entering the market, having already certain market share, and apparently there's also an appetite for those brands.
Yeah, fair point. And it's we're seeing the same situation. So like you can't ignore them; they're there, and you have to play in that space because to your point, they're cheaper. They're likely better in a lot of cases than the alternative, and so clients want those vehicles, and so that requires us as a fleet management company to have relationships with these folks so that we can treat them just the same as we would with any other domestic or international supplier.
Yeah.
Of course, there is one thing that I would love to add. is, of course, that also in Europe, there has been sort of an opportunity that has been created by the traditional car manufacturers in times of supply shortage, where some fleet managers, big fleets, felt that they could not get the vehicles on time that they needed for the mobility of the employees, and so they needed other vehicles that were available for their employees, and those Chinese brands, of course, they were available, and they have had there the first, let's say, entrance also for many fleet managers, which has created for them, I think, also sort of a positive experience.
Yeah.
That is very important what he was saying. The OEMs made a kind of arbitrage. They went to sales channels which were more profitable during COVID because the production was limited due to some parts in the supply chain which were not available. So they decided, not everybody, but a lot of them.
And they skipped the discount for rental companies.
Exactly. They moved the volumes from the fleet and the rental car business or the leasing business to the private customer. For the private customer, let's assume he is paying full list price and the fleet's not. Mm-hmm. They moved this, which was very easy because you don't give discount and he's not buying. Very easy. But to go back is much more difficult. And the companies, the fleet companies or the fleet managers, they had to move to a different supplier. Yeah. So they went to the Chinese, they went to Koreans, went to Japanese. Yes. That is something you have difficulties to turn back, huh?
Yeah. Yeah. So actually, a part of the opportunities for Chinese brands are created by the decisions the European OEMs made at that time. To come back to global fleet management, we are recording this podcast during the Global Fleet Management Summit, but we were discussing that everything is going back to local, maybe even. So, is there something like a global fleet manager in let's say?
Yeah, there are. There are global fleet managers.
What is their position at this moment? Is it indeed strategic more than?
I think it's even an interesting position. If you look at some of the pharmaceutical companies or some of the elevator companies where they clearly have global fleet managers with also sort of a global governance. Of course, they have people in the regions, etc., and they even have local fleet managers. But what I'm seeing is that they are still setting parts of their strategy centralized on a global level. But like Uwe also mentioned, of course, with regional differences and local execution, and I think that will continue also in the years to come. But I also think with the mobility challenges according to sustainability, EV, etc., and that the voice of that fleet manager can become even more important and more strategic than it was before.
Yeah, so they get a strategic position. Jeff, you agree with that?
I fully agree. Yeah, I think and the global fleet manager role has always been complicated, and to the point of having so much local nuance and so many different things to consider at each individual location that you're operating in, and wanting to create a global strategy, those two things somewhat seem in direct conflict with one another a lot of times. So it's challenging, and it's getting more challenging in the current environment, but I think partnering with companies that can support global strategies is really important, and also understanding best practices across different geographies that you're operating in is a huge benefit for having centralized global fleet management.
Especially in these days of turmoil and rapidly changing tariffs and perspectives.
Absolutely. If you can have a situation where there's a geography that you're operating in that's doing light years better than someone else from a purchasing, maintenance, and uptime perspective, and you need to be, as a global fleet manager, you need to be collating that information and sharing it out to the other localities that you operate in so that people can adapt and follow suit.
Yeah, all right. Thank you. And I must say that we're already running a bit out of time. So I want to go to our closing notes. And this is the easiest part of the podcast. I would like to hear from you what's on your business agenda that could be interesting for our fleet managers, our listeners, and viewers of this podcast. Jeff, I start with you.
Yeah, I think last year Element launched its purpose to move the world through intelligent mobility, and everything that we do is in direct support or underpinned by that purpose. And and what we're focused on right now is specifically related to that intelligent mobility component in terms of, we made an acquisition of Autofleet, Israeli-based company that has a fantastic group of people that do route optimization and pool vehicle management and things like that. Like this connected vehicle and optimizing how you use your fleet to support your business objectives is really the most important thing right now. And so we're leveraging that a lot to support clients. And so our big focus is on, of course, client experience. We want to get the basics right for our clients, and we want to help guide them, be a strategic partner for them. And that's really where we're.
Yeah. All right. Thank you. Uwe, what's on your agenda?
I think there were 3 major happenings which were jeopardizing the free trade. That was COVID. We all remember this. It's quite important. Then a second, I would say China is coming up with good products, better than US and European ones. This is also important. And the third one is the decision of the US administration to put in place significant tariffs, go and go back and everything. But these are the 3 things, I think, which are the base of the lessons learned for all fleet managers. It means protect yourself, be careful, keep good relationships to your supplier. Sometimes it's better not to have one additional point of discount, but to have a good, stable relationship with your supplier. It's much more important because this can disappear within a second. We have seen it 3 times, 3 happenings. So protect yourself. Be local, be more local than in the past, but don't become crazy and do everything regionally because this will destroy a lot of value. Still keep in mind that you can learn from one region to the other, share best practices. Protect yourself. Look on your people which are in your area. Make sure your supply chains are safe because the next happening that will come. And I don't know which it is.
Okay, well, we'll see. Stephen?
Well, I would say that in times of uncertainty that we need each other, and that if we can talk to each other and try to collaborate, that we can only strengthen our positions. And one of the things that I'm looking forward to is also welcoming regional and global fleet managers at the Fleet Apex Summit that we organize in June, mid-June, in Bangkok. The second time that we go to APEC, because for many fleet managers, it's also an interesting region to know more about.
Yeah, I completely, fully agree, Stephen. Thank you for that. Thank you for joining us for this podcast, and thank you for listening and watching on YouTube, of course. And keep track on our agenda and news at fleeteurope.com and globalfleet.com. Thank you very much.